let's talk about where things are right now with the business. Clearly, the market is giving you credit or hoping to give you credit for what the world may look like 12 months from now. But there's a lot of wood to chop between now and then in terms of getting more riders in the vehicles and also trying to figure out how potentially to diversify this business. I know you've been talking about food delivery. Obviously, your biggest competitor, Uber, has had that advantage during this period, but you want to approach it differently.
Yeah, absolutely. We had a great quarter, 47% revenue growth quarter over quarter. So we're proud of that. Rideshare recovery is happening. The company is a great recovery stock because it's tied to mobility and transportation and economic activity. And on delivery, yeah, it's a broader concept than food. Food was just an example, but the basic premise is there's a large B2B opportunity to use the platform that we have, the technology we have, and partner with the drivers we have to help retailers and all sorts of businesses deliver all types of packages on a last mile basis.
Can we talk about that last mile basis? Because I know people have talked about this idea before, but without the quote unquote front end, and your competitor obviously has Uber Eats, a true front end system. Yes, it's a commission oriented business, but you go to one place, you buy different things. You're talking about effectively providing the last mile service, but it means that all the other retailers effectively have to have their own front end. What do you think the difference is in the distinction in terms of how successful that can be?
Yeah, I mean, it's still early stages. We just started talking about it. We've done some work on it. But basically, retailers want the organic traffic. They want to build the customer loyalty on their platform, and they don't want to pay a commission to another party to create the marketplace. And that's where we fit in, and I think that's where our approach would be quite differentiated.
But so you don't believe, though, that ultimately people want to go to a one shopping mall and then be able to hunt around and effectively find the store within the store, that they actually want to go independent as a consumer choice?
I think when companies, retailers start offering the best prices on their own site, that will drive traffic organically. Look, there's going to be these marketplaces, these platforms. The world does not need another one, another consumer platform for delivery. We are focused on personal transportation. That said, since we have the technology, we have a phenomenal driver base that is looking for earning opportunities. It's something else that we will look at, and stay tuned for more.
John, speak to us about the path to profitability at this point. What has to happen?
Sure. So we reiterated that we are on track and we plan to hit that on an adjusted EBITDA basis, the profitability milestone by the end of next year. Even with slower ride growth than expected, we've pulled out $300 million on an annual run rate. By the end of this year, we'll have pulled out $300 million of ongoing expenses, which allows us to hit that target, again, with much lower ride volume.
When you think about a potential vaccine and your drivers, what's that timeline look like for you? And also, do you imagine potentially trying to help drivers financially or otherwise in terms of getting access to that vaccine?
It's anyone's prediction on exactly when the vaccine will be distributed and at volume. But we're optimistic for the first half of next year at some point to have that availability. We would love to help the driver community get access to that, but we'll just have to wait for more details about a vaccine.
What do you imagine pricing is going to look like in the future? And I ask just because I have to imagine that during this period, there's going to be a bit of a consolidation in terms of market share that both you and Uber may ultimately gain in the mobility space. You keep hearing about small businesses, including local taxi firms, car services and the like, dispatch operations, really struggling during this period.
Yeah, I mean, different than Uber, we've taken a portfolio approach to transportation. So we have, bikes, rideshare, as you mentioned. Rideshare has been hit, as everyone knows, but seeing that quarter over quarter recovery. So we like our portfolio approach. We sell bikes here in New York City. City Bike is a program that we own and operate. That has been up year over year. So I think by having a broader portfolio of transportation options, we can weather this type of tough situation.
Shepard Smith here. Thanks for watching CNBC on YouTube.